So the what if Japan decides to hike its interest rate on December 19th at the Bank of Japan meeting just became a discussion about how much the Bank of Japan BOJ will hike, not if. Apparently that's a foregone conclusion. I just saw a story I want to share with you out of Bloomberg just a couple hours ago. It says BOJ may hike interest rates 4 times by 2027, officials say. So I did a video about a week or so ago. I'm going to link it at the end here, so go check it out, about what could happen at the potential consequences to U.S. markets if we experience this yen carry unwind, right? Which makes it less opportunistic for the Japanese to be, borrowing in yen at 0% bound rates to invest in U.S. equity markets, tech stocks, cryptos, private credit vehicles. If that starts to unwind, it's going to have reverberation big time here in the U.S. markets. So this story, I'm going to explain why it's even more crucial feeding into yesterday's Fed cut in the United States. Because you know what's happening. As the Fed's cutting, the Bank of Japan is going to be hiking. So what's going to happen? That gap is going to close much sooner than, let's say, if the Fed was also raising rates. So let me share the story with you and I'll explain the dynamics, and I want to get your thoughts and input. Bank of Japan Governor Ueda, Kazuo Ueda, I'm butchering this guy's name, policy path may include as many as 4 rate hike increases by 2027, with 3 more coming after a widely anticipated move next week, according to a former executive director. They are probably thinking they have completely fallen behind the curve. Hideo Hayakawa, the former official, said in an interview Wednesday, Ueda will probably indicate it's not the end of the cycle even after raising the rate this time. So it's a foregone conclusion. It's done. Central bank is broadly expected to raise borrowing costs to 0.75% on December 19th. That'll be its first move basically since January, so almost a year. A primary market focus of the event, which means that rates have been at a 0.50%. So raising it to 0.75 is a big deal. Its first move since January. A primary market focus of the event will be how the bank characterizes the future policy path. They will probably go back to a pace of rate hikes once every 6 months, this guy said. He said the terminal rate is probably around 1.5, but there's some discussion later on in the article about it being as high as 2.5%. Well, it won't be too long until our Fed gets back down to 2.5% if they keep going, requiring 3 more hikes beyond the expected move next week. A key point for the Bank of Japan watchers is whether the central bank will offer any guidance about Japan's neutral rate, right, their target rate. A level deemed neither stimulative nor restrictive for the economy. The bank previously indicated, here it is, that the level lies somewhere between 1% and 2.5%. It's a pretty big window there. Hayakawa, who has known Ueda more than 40 years, noted that the governor was almost unequivocal in his communication about next week's board meeting, with a cluster of comments that together sent a strong signal. This guy, also a former BOJ chief economist, warned there's a risk that Takaichi's expansionary fiscal policies, the former president, right, could force the BOJ to quicken its pace of rate increases and push the terminal rate even higher. She compiled an economic package last month with fresh spending of a larger scale than economists were forecasting. I think, didn't Trump have her out on at some event just about a week or so ago? So she's expanding, and so that is causing even more consternation for the Bank of Japan. So this guy says that he almost stated that the hike is going to happen categorically. Okay, so this is no longer speculation. Appears to be it's going to happen. Probably a 1/4 point and likely several more cuts over the next, let's say, 12 to 18 months. So what does this do? The dynamic when our Fed is cutting rates, and although they're jawboning the hawkish cut that they're going to have to wait and see whether further cuts are warranted, you know it's going to happen. They have to service $1 trillion. Look at my video from yesterday. $1 trillion just of interest service costs on the U.S. debt. They need to service that debt at lower rates, not higher rates. Most of that debt's maturing this next year. I think it was $7 or $9 trillion of it is coming due at rates that was like 2% bound or lower. So the Fed's going to keep cutting, especially with a new Fed chair coming in May, who's going to be ultra dovish. You know that. So as the Fed cuts, okay, and the BOJ hikes, the U.S. dollar yen spread totally collapses, and it'll be accelerating. Okay, so what happens? What's the key mechanism? The Fed cuts, and what does it do to the dollar? Weakens the dollar. The Bank of Japan hikes, that strengthens the yen. So the hedged yen carry positions get squeezed or unwound. Okay, funds unwind, and then as the funds unwind, the yen gets stronger, more funds unwind, and it starts to, selling begets more selling. When you unwind, it says yen-funded positions. What are the casualties first? What are the sacrificial assets? Emerging market bonds, junk credit, discussed that on the channel recently as well. Private credit, okay, private credit, and it ties in with tech and the AI mega cap equities and potentially cryptocurrencies. So those I'm seeing here that are called the sacrifice assets when you need to get hands on yen fast. So this is something that now just went to the next level, okay, in terms of December 19th. And when I say, look back at the video linked here at the end, that there still could be a meltdown 2025 if the BOJ is super hawkish at its meeting, in addition to raising its rates. The U.S. markets are going to try to get ahead of this. What does that mean? Okay, we'll have to wait and see. I'm not giving financial advice, not telling you what to buy or sell, obviously. No one's got a crystal ball. But this could get ugly very, very quickly if we see some indication from the BOJ that they feel like they're behind the curve and need to catch up. Don't forget, the Fed's been hiking rates. But now we have a culmination, let's say the double-edged sword, a Fed reversing course and injecting liquidity through buying bonds. Our economy is not doing great, no matter what the talking heads say. And Bank of Japan feeling that they've been too low for too long, and now they have to play catch up. This will meet, and when it does, there's going to be a whole lot of pain on the unwind. Thanks for watching. If you enjoy the content, leave me a like. Please subscribe to the channel if you're not subscribed so we can keep growing the community. Leave your thoughts and your comments. And with that being said, I will talk to you soon. Bye.